Welcome to the Chargepoint Podcast, brought to you by Flexecharge, your gateway to the future of EV charging. In each episode, we dive deep into the world of EV infrastructure, offering insights and perspectives from industry leaders, innovators, and the people at the forefront of deploying charging solutions and networks. Join us to explore the exciting developments that are accelerating our world towards sustainable mobility.
Welcome to the Chargepoint Podcast. My name is Christoph and I'm from Flexecharge. Today, we're diving into the future of energy flexibility with Jonatan Raber, co-founder and chief product officer of Fever. What if the infrastructure, which we already have, battery storage, data centers, EVs, could be turned into a powerful asset for the energy grid? Fever is doing just that, unlocking hidden values by transforming these assets into flexible energy providers. From helping utilities stabilize their grid to enabling businesses to tap into new revenue streams, Jonatan and his team are redefining how we think about energy management. So how can a data center go from being a grid burden to a key player in energy flexibility? And what does this mean for industries looking to optimize their energy use while boosting their bottom line? Well, stay tuned. This conversation will change the way you see the future of power. Let's get started. Welcome to the Chargepoint Podcast, episode 14. And we have a very special guest in the hot seat today. It's Jonatan from Fever Energy. Welcome, Jonatan. Can you maybe introduce yourself to the audience and tell us a bit your origin story? So where did you started and how did you end up here at Fever?
Sure thing. And thank you so much for having me on the podcast. I love it. I listen to every episode now. So big fan. So I'm Jonatan Raber, co-founder of Fever Energy, and also the chief product officer here. Our origin story actually started in the EV space. So one of my co-founders used to work for this car sharing mobility app, Volvo Car Mobility. And we were talking a lot about his challenges at the time, working at this company. And one of the big things was, how do you increase utilization of cars and EV cars to make kind of that business around sharing car services work? And we were discussing it a lot, and he couldn't make it work. You know, everybody needs a car at the exact same time, and then everybody doesn't need a car all other hours. So you need a lot of cars for a few hours of the day, and then they're just standing still, not earning anything. And while we were discussing this, kind of simultaneously, we were kind of being exposed to the future of the grid through some friends that were investing into big battery parks. And they were telling us all about the need for flexibility and grid services and, the future of the grid. And I think somewhere there, it just dawned on us that, hang on, you can actually solve the problem of how to utilize infrastructure or cars without things moving around. So you can actually, just having it plugged into the grid drives a lot of value back to the business by offering up grid services or kind of utilizing the grid as a way to monetize the volatility in the grid. So that's really how it started. We were super focused on EV, and that was kind of the future of energy. And we realized okay, you can really use these cars as helpers to the grid. And then that kind of transitioned into, okay, we should build a business around this. And our backgrounds from tech, from self-driving cars or Spotify like myself, or financial technology, fintech, we really saw that, okay, all these parts, like having a big scalable platform, using data, IT security, machine learning, AI, all that can come together to create a decentralized grid where all these different types of assets can come together as one and participate in helping the future of the grid to kind of allow us to have a fully sustainable future. That was a lot. Sorry, but
No, it's not a lot. Absolutely. That's really sounds very natural. Yeah. So you were working back then at Spotify as you started to work on the project?
I had actually quit Spotify, and my co-founders had quit their jobs as well, and we were looking for new challenges where we could kind of build something from the ground up and kind of get back into that startup mentality that we always loved working at what was previously startups. So that was what was driving us. We just wanted to find a problem that was big enough for us to solve.
Yeah, you certainly found one. Yeah. So okay. So the idea was kind of materializing. You could see you had kind of all the bricks coming from your different jobs and your skills. So how did you sit down and say, okay, it's going to be a platform? So I mean, what's the next step, and how do you validate that it was a good idea?
That's a good question. I think it would be a total lie if I said that we knew from day one exactly what we were going to build and what we would have today. Our first priority was really to solve problems, and we wanted to start small and maybe solving a few problems for a few potential customers or a few cases. So the first thing that we did was we really, really dove into the industry. None of us come from energy. So this was a whole new learning journey for us, talking to people that had been in energy for 20, 30, 40 years, many of which had actually changed the way the grid operates in the markets. And understanding kind of the underlying problems and where the market was going and what are these like macro trends that are happening. So understanding the space was number one for us, and then talking to potential customers to understand their problems and what they want to do themselves and what they're looking for help for, and kind of how they see their business growing and interacting with the grid. So we had a few hypotheses in the beginning. We knew that EV was and is going to become such a big source of energy and flexibility. Like, what can we do there? And the other side is what is going to change in terms of infrastructure. So you're going to have a lot more batteries in the grid, not only in cars, but standalone batteries in homes or in the grid. So that was also something we wanted to explore. So a lot of learning, and then finding some first customers that we wanted to help earn money, basically, through our software. So our first customers was one utility company where we helped bring their entire fleet of EV cars to flexibility markets and controlling these cars and forecasting kind of the load of these cars. And the other customer that we had in the beginning was owners of a battery infrastructure. So they invested into large-scale batteries. And then thirdly, data centers that are these huge, kind of used to be consumers and almost seen as a cancer on the grid. But we wanted to transform that and make sure that they could kind of take the step into becoming a lung of the grid and helping the grid out. So those were the three kind of use cases we were dipping our toes into, trying to see how we could solve the problems. And what was amazing is even after 4 months from bringing in the first developers, we were live in market, earning money for our customers. And we wanted to make that trip as quick as possible. Like, paying out money to a customer and getting paid is the real receipt of something actually working. So we didn't want to spend too much time in theory and desktop research. We wanted to actually go out and try stuff out.
So how much capacity was it in the beginning you were handling for them? Remember?
Not a lot. I think we were around 500 kilowatts of flexibility around there. So it was pretty small back then.
Yeah, but start small, of course, and test it. And exactly. You're actually really making money out of those 500 kilowatts just to get started. Then you're live, as you said.
Yes.
Yeah, absolutely. Yeah, very interesting. Great. So if we try to, again, I think it's still maybe not clear for all our listeners yet exactly. So let's try to be more precise now and really give the big pictures. in which market is Fever operating, and if it's, what are you disrupting? What are you changing in the established? What are you making better?
I would describe it as we are in the market of flexibility. So we want to make sure that all assets that can participate with their flexibility are allowed to and earn money on it. I think it's as simple as that. Our product to our customers is, end of day, more money that they can use to fund their own operations or pay out to their customers. But today, there's such a big gap between all these energy resources out in the open. EVs, you have batteries, you have solar panels, you have EV chargers, industries. And all of them are not used to their full extent. And we want to be the bridge between those energy assets and the energy market. And what we do then is we unlock flexibility. So we come to you and we say, you have this energy consumption or this energy production or this storage capacity. If you use Fever software, you will earn more money per kilowatt than you did before.
Yeah, because the before. So let's come just to the before. So how would you do it usually, or like a year or 2 years ago before you came, right? So again, try to paint a bit the ecosystem for us, right? So who would that turn to instead of you?
So the honest answer is a lot of what we're doing is we are unlocking things that have never been unlocked before. So this is, I would say, all of us listening to this podcast, I think maybe are a few years ahead of the general public.
Yep.
So what we're talking about here is flexibility, and harnessing flexibility and monetizing flexibility is still a very new thought. And so our customers have never done this before. They're not going from, somebody else to Fever. They are unlocking this through Fever.
Yes. So it's zero. It's before that it was zero, and now is the extra that they couldn't do before.
Exactly. And the kind of 3 steps that we do to make it very concrete is, number 1, we control the energy assets in a way that helps the grid, meaning that we can decide on very short notice, should we charge more or charge less? Should we consume more or consume less? Should we produce more, produce less? And we do that using signals from the market, price signals or the frequency or kind of bilateral integrations that we have with market participants. Number 2, we then trade this flexibility on markets, making sure that you get the most money for each kilowatt that you bring to Fever. And then number 3 is that we give our customers full control and full transparency into what's happening. So this should not be a black box. This should be and will become a core part of our customers' operations. So they need to understand, this is what's actually happening now. This is how much I'm contributing with, or this is how much my flexibility is actually being controlled in. And I think that's a key thing to remove that black box mentality that it's very easy to slip into when you talk about AI or machine learning, where it's just hands off. We really want to give control and transparency to our customers.
Yeah. Really open up the box so you can really see what's happening. So I can also make projections, right? So it can tell me, so look how well it's going with this capacity. Imagine if you put more chargers or have more batteries or expand your data center, this is the curve you're on, right? And
Exactly. Some of our customers are actually making investments decisions now, knowing that, okay, we can kind of count on this added monetization. This helps us to build out our infrastructure or invest more into different spaces, or maybe improve our technology, because then we can unlock even more flexibility. So it becomes like a core part of our customers' operations, and that's what we really want.
Yeah. What kind of technology improvement could it be so they could unlock even more flexibility? Can you give us an example?
So it could be anything from better metering on site, so that you actually know exactly what's happening. It could be better, quicker control. So sometimes, APIs are not quick enough. It takes too long time for messages to get dispatched or data to come back. And if you make that quicker, then you can participate in more types of energy markets and flexibility markets.
Yeah.
So those are two very concrete examples, I would say.
Yeah, the speed, yeah. But maybe that could be, again, I'm really using you to help to paint this picture, right, for our audience of this super exciting new markets. So can you elaborate a little bit on the different types of flexibility? Because where time can be of the essence, right? So are we talking seconds, minutes? Can you just give us again the big categories of products that can be that we
For
can
sure.
we can address in terms of flexibility?
Absolutely. So actually, let's just kind of take a step back.
Mm-hmm.
So why is flexibility needed at all? And it's because we're moving from a world where we had high predictability and high planability in our energy system. Everybody knew how much energy was going to be consumed. We had dials in our power plants to kind of crank up or crank down energy. So things were pretty simple. Everything was easy to keep in balance. Fast forward to today and the future we're going into, we have a high, fast forward into the future, we have much more volatility. So you have wind and sun production.
Yes.
And you don't know exactly how much the wind is going to blow or if the sun is going to be out or not, if the clouds are going to come. So the production goes up and down every second.
Absolutely.
And this creates havoc for the energy grid that needs a very stable and smooth balance. So this means that you have the need for flexibility on the time scale of like sub-second. We need to be able to jump in on very quick reaction if something breaks in the system, through to a couple of seconds, through to a couple of minutes, and then until like hours and days, actually. So we can help customers along that full continuum. So you could, imagine you have a battery, maybe you can be lightning fast, but then you can also store energy when it's cheap and then sell energy when it's expensive. That's also a form of flexibility where you smoothen out the energy needs, the energy prices.
So you can participate for milliseconds or few seconds, or you can participate for hours,
Exactly.
depending on
and
what
the kind of the millisecond. That's we balance the frequency in the grid. That's where we use the frequency in the grid as our trigger, as our signal.
Yes.
But then towards like the hour and the daily balancing and flexibility, then we use other markets like the spot price market as our trigger and our understanding of what's needed.
Yes, exactly. Yeah, but that's where, again, you were talking about the fintech background from one of your co-founders, right? It always made me think when we discussed this about it's going into kind of, financial trading, right? Where stocks are being traded, again, based on super advanced algorithm. This is also what you're building somehow, right? So, there's some analogy here for those who want to understand. Great. So I think it could be interesting to understand. You were posting the other day about the November performance, and you were saying Fever delivered 130% of market performance. It was not the best month ever, but it was good, solid. That can be really black talk. Well, people don't understand. So explain us a bit what you mean by 110% in market performance, please.
So first of all, it's just funny because it's so easy to live in our box in our world where everything is going really well, but we're never, communicating out to the world. So marketing is definitely something we need to improve, I would say. And we decided okay, we need to actually start talking about our performance because we believe it's really good. And in this market, since it's so new, it's pretty difficult to actually find a reference point that everybody understands.
Can you imagine?
So this is what we were talking about is basically that for the assets that we control and we trade for our customers, we are earning 30% more than the average market participant is doing. So we know in certain markets of flexibility what the average earning per megawatt is. And then we can compare that to our earning per megawatt. And we see, okay, we're actually much better at optimizing and choosing the right product and choosing the right auction or right price consecutively over months. So I think 10 out of 11 months this year, we've been above this average. So we're very proud of that, because that means that our modeling and our quick reaction to new data and launching new trading strategies is really working. And it's working in a way where we are able to send more money back to our customers, so that they become more confident in growing.
Yes. Yeah. I mean, this is really money talking. Yeah. I mean, as a communication specialist and marketeer, yes, I would say this is a really good thing you need to explain a bit better, because concretely it's about, you want to make 30% more. Yes, please. Then, come to us, right?
Exactly. So I'm sure, there are others that some months probably do better than us. But it's about consistency. It's not about guessing the right time one month, but constantly evolving, constantly understanding how you optimize across more markets and how you adapt to new market kind of structures and market players and so on. And that's what I feel so proud about, that we are able to be so nimble, even though we're new, and that we built our platform in a way where we constantly ingest data to make the right decisions.
Yeah.
So probably next post we'll do on LinkedIn is about how well we've done over many months.
Yes.
Because doing well during 1 month, that could be luck as well.
Exactly. You need to show consistency. Yeah. So I think, again, as we keep on painting the big picture and to help our audience understand the market. So again, let's continue to paint the picture about your company. So it's not like you're globally active, right? That's not possible, right? Nobody is in this space, right? So, and I know that you're not the only one working on this, but again, tell us a bit, because if you were alone, then, a good idea. If you're alone, then there's something wrong, right? So the other people have also spotted this opportunity. But it seems to me that it's a bit by regions, right? So companies are emerging in different regions of Europe. Let's stick with Europe for now. Tell us a bit about your license to operate. Where are you operating, and what are a bit your plans, maybe in terms of expansions?
You're right. So Europe is our scope. I think we all it's a bit. We all love Europe, and we think that Europe is facing not only infrastructure problems when it comes to kind of transitioning from old energy to new energy sources, but there's also a story here about resilience. So Europe is going to become much more connected, and we need to make sure that our energy system is resilient to external threats as well. Mm-hmm. Whether it's kind of weather-related or country-related threats. So that's why I think there's a story here where Europe is integrating more and harmonizing more, and we want to make sure that we're a player that helps this transition for Europe. So we have kind of our technology, and the core of our technology works anywhere. Mm-hmm. Any infrastructure owner or utility company can use our software. And not only in Europe, but globally. But we do want to focus, because we are taking a lot of responsibility for our customers to actually also go to market and trade some of this flexibility for them, because that's still quite difficult to do. And that's where we don't want to take on too much at once. So we're live in a couple of European markets, but next year we're going to go out into continental Europe. So we're kind of focused on the Nordics right now. And we're going to keep on being very specific about what markets we launch to. And we're often using our customers as our roadmap kind of guides.
Makes
They're
sense.
saying, okay, we have a big opportunity here, bring us here, and then we go with them. Because as you say, there are many companies out there, and some are doing it really well, like in terms of offering a flexibility platform. But I think there's a difference between doing that and if you're owned by another energy company, or if you have some type of stake in a certain part of the grid.
Right.
Versus us, we try to be totally independent so that anybody can use us out there.
Yeah, absolutely. I couldn't agree more. Yeah, exciting. So we look forward to see the expansion in 25. Yeah.
Yes.
So if we come back a bit to the different pillars, as you said, in terms of customer types that you working with, but let's of course focus a bit more now. Go back to the EV charging industry. So what are is it have you tried to quantify the opportunity versus the data centers or versus static big batteries, grid scale batteries? I mean, how big is the opportunity to work with EV charging?
It's I'm not going to put a number against it. I think there are many reports here. I think the bottom line is it's going to grow a lot. And the reason I'm very confident in that is because you're going to, over the coming 10 to 15 years, see a big transition from our existing vehicle fleet to an electrical vehicle fleet. So you're going to have millions of rolling batteries and millions of assets that are consuming or could be producing energy.
Exactly.
And so the big question to society, I think, is: do you want to use that that asset base, that infrastructure that will exist for a reason of transportation, or do you want to also invest into like a standalone grid supporting assets like grid scale batteries? And I believe that the most efficient way is to use assets that exist for other reasons as well, like EV chargers or EVs.
Yeah,
because these assets, they can contribute to the grid without any real kind of. They don't need any big margins. Any added revenue is good revenue for them.
exactly.
And so, from a socioeconomical perspective, it's just much more efficient to use assets that you already have instead of building so much more new.
Absolutely.
So I think the flexibility is a huge thing and will continue to grow. And I think most of that value will go towards assets that have a different primary use, such as EVs.
Yeah, that's interesting. Yeah. So what kind of companies within the EV charging or EV space are you talking about? You mentioned a few, but can you paint a bit the picture of what kind of collaboration or talks? What kind of companies are you in dialogue with?
So we're actively working with utility companies that have big portfolios of households. And in these households, many times there exists EV chargers. And for these utilities, they want to make sure that they can actually harness this flexibility, offer up not only smart charging, but true kind of smart charging, where you charge in a way that's good for the grid. And where the customers, the end owners of these EVs can many times charge for free during the entire year because they're earning so much money on providing flexibility back to the grid.
Yeah.
So that's one big kind of customer of ours, utility companies and their pools of residentials and homeowners. On the other side, you have kind of the public chargers. So these are sometimes owned by the same utilities, and sometimes they are owned by more private companies just building out public charging infrastructure.
Yeah.
And it's a big investment for these companies, and they're taking a lot of risk for society.
Yeah.
And many times they have problems with finding the right grid connections, or they have bottlenecks in their grid connections where they can't really use all the EV chargers that they want to build out all at once. So what we do there is we deploy both behind the meter applications for how to use your grid connection in a smart way, meaning you maybe have a battery together with these EV chargers to do some peak shaving. I'm using buzzwords here, but I'm
but I think
you understand.
People, it's okay.
And then you can use the same grid connection as your gateway to the flexibility markets. So we're kind of helping these infrastructure companies redefine their business. So they're not necessarily in the business of EV charging. They become an energy hub, and their key asset is the grid connection. So how do they use this grid connection most effectively, both behind the meter and front of meter? And that's where we can come in and help them.
Yeah, absolutely. Yeah. And well, again, hope maybe it's not a surprise for some in the audience, but yeah, we are also in talks, of course, with you guys, because obviously there are some really interesting collaboration opportunities which we're exploring. So more on that in the future, in future episodes. Great. So maybe if we finish off with the last part a bit about the crystal ball, because yeah, we already, as you said, many people in this industry and listening to the podcast are ahead of the general audience, that's for sure. When I explain sometimes scenarios to people, they're completely amazed by what's around the corner or already happening. They don't even know. And it's just going to accelerate. So let's do the crystal ball a bit, but just 3 years, which is a long time for us in this industry. So if we try to fast forward to the end of 27, where do you see Fever and the flexibility market in 3 years? What will have changed, hopefully, and accelerated versus today?
This is such a difficult question. And it's funny because I actually think it's easier for me to answer what will happen in 10 years.
Okay, well, then let's start with 10 years, because 3 years is maybe a bit too tangible. So, okay, but let's take the long vision then.
We can do both. It's fun that you push me. I think that my absolute belief is that in 10, 15 years, we will have an energy system in Europe where energy is the price of energy is going towards zero quickly. So as an industry or a homeowner, you won't be thinking about what's the price per kilowatt hour, because it's going to be the marginal cost of producing with wind or sun. And then yes, you're going to have some hours of the year where it's very expensive for some dramatical reason, but that's gonna become kind of negligible if you look over the year. Yeah. So energy is going to become way more cheap and almost free. And what people are going to start paying for much more is flexibility. So the right to use and consume energy when you want. Do I want to be able to consume or produce energy whenever I want during the day or the year? Or am I more tied to certain periods of the day or the year? And do I pay or get paid for this flexibility? So people are going to start valuing their flexibility, understanding that this is what is going to drive my costs or my revenue. So that's what I think will happen, kind of the big transition from paying for energy to paying and being paid for flexibility. If you then go into like the near term, 3 years, I think we're going to see a lot of craziness over the coming 3 years. You're going to see much bigger volatility when it comes to energy prices, many more days with negative prices, many more days with crazy high prices. Various flexibility markets are going to see much more volatility because we are right now in a big transition from plannable energy to non-plannable energy. And so that's going to sow kind of a lot of confusion. It's going to sow a lot of kind of stress among those that rely a lot on the grid. And I think the true kind of hedge against this stress is harnessing your flexibility. So I think kind of the sophisticated companies out there will understand this and bake flexibility into their operations.
Yeah. So any fleet manager will know what flexibility can bring as part of it's a revenue, right? I mean, a fleet manager in a company would never create revenue before, but now she can create revenue for the company, right?
Exactly.
That's of course an amazing perspective that should become hopefully mainstream. And do you believe V2G will come really to market in 3 years? So because it's mostly down regulation, the other way around, but that you can inject energy back, because for now it's mostly, again, it's about reducing consumption. What do you see us in 3 years with V2G? What are your gut feeling?
I mean, I would love to be able to say it's going to be here in 3 years. Sadly, I think it's going to be more than 3 years. It's in some places the technology exists, but it also comes down to having grid owners be a part of this journey, because the physical infrastructure is put under new types of strains that you can't just deploy vehicle to grid without having the actual infrastructure a part of it. And then you have a lot of kind of the interface between the actual vehicles and the chargers needs to adapt. And then the end consumer also needs to understand how is this affecting their car, their guarantees, their earning, their cost. There's a lot of answers here that need to be solved for. And I'm not really seeing that part of the industry moving quickly enough for me to say that in 2-3 years we'll have vehicle to grid as kind of a common thing that everybody's doing, sadly.
Yeah, no, but there are so many moving parts. I mean, the cars, the chargers, I said the grid, infrastructure owners. So, we'll see. We'll see where we are in 3 years. But let's take it 1 year at a time. And looking forward to 25. Well, actually, as the episode will be released, we're probably already into 25. But anyway, so I'll finish up by wishing you happy holidays and a fantastic year 25. Looking forward to continuing our dialogue. And wishing you a great day.
Yeah, I'm really looking forward to it.
Thank you, Jonatan. Take care.
Take care.
And that's a wrap on today's episode of the Chargepoint Podcast. What an insightful conversation with Jonatan from Fever. Today, we explored how energy flexibility is transforming the way businesses interact with the grid. Instead of being passive consumers, assets like EV fleets, large-scale battery storage, and even data centers are now active participants in balancing energy demand, stabilizing thereby the grid, and creating new revenue streams. One of the biggest takeaways? Flexibility is becoming a critical asset. Whether you are a Chargepoint operator, a utility, or a business running energy-intensive operations, the ability to shift energy consumption in real time is no longer just an efficiency play, it's a profit opportunity. Think about that. Jonatan also shed light on how data centers, often seen as energy drains, can actually help the grid by adjusting power usage at the right moments. And we talked about how EVs and batteries can act as virtual power plants, a famous word. We talked about how EVs and battery can act as virtual power plants, why speed and automation matter in flexibility markets, and how companies can integrate these strategies without disrupting their core operations. It's very clear that the energy market is shifting. Monetizing flexibility is no longer just for big players, and that's a really exciting perspective. With the right technology and market access, companies of all sizes with all kinds of assets can take part in this new energy economy. If today's discussion got you thinking, don't forget to subscribe, share, like, and let us know your thoughts. As always, if you have suggestions for future guests from the industry, feel free to drop us an email at hello@flexecharge.com. Until next time, keep innovating, keep charging, and we'll see you in the next episode.